So we're independently managed business. We're focused purely on Vietnam, and we've been able to generate outperformance over a number of years by doing simple things well. We take the exciting Vietnamese macro story, we find great companies, we engage closely with them, and we're looking to drive returns over a 3-5 year window. Vietnam's not a market to go in and out within a year, but if you take a 3 to 5 year horizon, I think you'll be very well rewarded. Our engagement is authentic, particularly along the lines of ESG. We've been at this for more than a decade, really trying to drive our portfolio companies to be better at reporting, more transparent in how they deal with us as an investor, but also very cognizant of what they need to measure in terms of their carbon footprint. And our portfolio is about 60% lower than the index carbon footprint. And we're able to get our portfolio companies really up to speed on the changing reporting requirements that they have going forward. We're looking at growth at a reasonable price. We're looking at businesses that have got 20+% earnings per share growth at reasonable valuations. Our portfolio is on about 8 times price earnings for 2023, and yet with 20 to 25% earnings per share growth. So we think there's great opportunity in Vietnam, and the stock's at a historically cheap level, and I'll come on to that in 2 minutes. This chart's important, I think, and many of you perhaps have seen it, but just bear in mind a couple of data points here. Firstly, the urbanization rate. Vietnam's urbanization rate is 37%. That's where Western Europe was at the end of the Second World War. It's where China was in 2000. It took the world 90 years to get to an urbanization rate of about 80-odd%. It took America about 60 years to do that. China went from 20% to 55% in about 14 years, and Vietnam's at 37%. If you look generally and globally at how countries have emerged in terms of urbanization, that is what's known as an inflection point, 37%. So one thing's sure, Vietnam is going to grow, its cities are going to get bigger over the next period of time, and that means there's tremendous opportunities in the long term for urbanization, driving real estate opportunities, the growth in modern trade, convenience stores, supermarkets, and the efficiencies in the manufacturing sector, which are already strong in Vietnam. The other interesting point to highlight is the per capita GDP growth. At $4,000 per head, that's also an inflection point. That's where we've seen in other Southeast Asian countries, their GDP double and treble within a short period of time. So Vietnam, great opportunity if you've got the appetite for a 3 to 5 year investment journey. If you look back over the last 30 years, Vietnam's enjoyed incredible levels of compound growth in terms of its GDP, average 6.5% per annum over the last 30 years. And that inflection point that I alluded to there, you can see on the graph on the right that the GDP per capita 4 years ago was about $1,000. And the Vietnamese people were starting to invest in insurance and education for their kids. Now at $4,000, they're consuming branded products, domestic brands, as well as imported brands, not just from the West, but from South Korea and Japan. So it's a changing demographic, which is a really interesting time for us as an investor. In fact, it's one of the highest GDP growth countries in the world, and particularly in Asia. It's come out really well out of COVID. And it's seen its macroeconomy become the envy of many. That said, and we'll come on to that in a minute, it doesn't necessarily translate into what's happening into the capital markets, which is why there's a great opportunity to buy into good companies at very undemanding valuations today. The population is young, hardworking, industrious, and is well suited to manufacturing for export. So Vietnam's attracted many manufacturers looking to diversify out of China and into Vietnam. These are companies like Intel from the US in terms of semiconductor chip assembly and test, Samsung from South Korea in terms of mobile phone and electronic device assembly, and Apple through its through its subcomponent supplies, people like Foxconn. They've invested billions of dollars in Vietnam, taking advantage of that hardworking population, taking advantage of Vietnam's strategic location and the open nature of its economy. It has more than 15 free trade agreements around the world. So it's been attracting a big flow of foreign direct investment, or FDI, and that, coupled with the success that Vietnam has had in exporting and generating trade surplus, and the fact that many of its people are working overseas outside of Vietnam and sending money back, really supports the balance sheet of the country and the foreign exchange reserves. So that supportive macro policy, where Vietnam wants to be a friend to everyone and a servant to none, has really only emerged in the last 30-odd years with something known as the open door policy that was brought in the late 80s, early 90s. And since the accession to the WTO, just a couple of decades ago, Vietnam has really started to find its niche as a key part of the global supply chain. And the Vietnamese government have got three initiatives. One is for Vietnam to be a key part of the global supply chain. The other is to see Vietnam emerge as a more modern industrialized economy. And thirdly, they want to see the wealth of the people increase. They want Vietnam to become a middle-income country. And that rapidly growing middle-income consumer class is very exciting. We're seeing by 2035, another 35 million consumers in Vietnam. They're hungry for brands, they're digitally savvy, picky as consumers can be, spending more on domestic travel, on holidays, on education, investing for the future, buying into life insurance policies. And that's driving an increased activity over the last few years in the capital markets. As it's also digitally connected. So there's 150 million phones in Vietnam. There's only 100 million people, so more than one phone per person. But 3/4 of those 72 million phones are smartphones. So that's providing digital access to banking, to stockbroking, to services, as well as consumer devices. So the retail growth has accelerated past through the COVID years, and the manufacturing sector is still in expansionary territory. Vietnam survived well over the last couple of years when many countries have really suffered FX concerns in other parts of Asia. You look at Sri Lanka or Pakistan, where those countries have really suffered. Vietnam's got this strong manufacturing base, exporting to the US, to EU, and importing from China. So where the currencies have been appreciating, such as in the US, Vietnam's benefited through exporting. And where the currencies have devalued or weakened, such as China and South Korea, Vietnam's benefited because that's where it's getting its imports and running trade deficits with. So it doesn't have a lot of debt, a relatively modest amount of foreign debt, and that's really helped it. The currency, a bit of a complicated chart. The currency's been relatively stable over, I would say, 30 years or so. There's been a trend of depreciation of about 2.5% per annum, but it's relatively stable at the current last few years. And the country has earned about $100 billion of foreign exchange reserves from the foreign direct investment, from the trade surplus, as well as the inward remittances from all the Vietnamese that are working outside of the country. Inflation is somewhat under control. Vietnam is able to rely on a lot of domestically produced energy. It's not a big importer of energy. Again, unlike other emerging markets such as Sri Lanka, such as Pakistan, Vietnam has significant renewable energy, has significant hydropower resource, as well as wind and solar, and domestic gas, domestic coal. It is a net importer of oil, but it's manageable. And so it hasn't suffered the high levels of inflation that we've seen in Europe and the US. So the macro is good. What's not to like? Well, we'll come on to that in a minute. The country is really, if any country can have a good COVID, Vietnam had a good COVID and a good recovery. And despite what's been going on in terms of the macro globally, Vietnam has done a remarkable job. Its scorecard there is one that you'd want to have in terms of its all the characteristics of a strong emerging economy, and yet it's still a frontier market. So we'll come on to the equity market. So capital markets don't necessarily follow in step with the macro story. And for Vietnam, it's very interesting. Vietnam is really domestically driven. Over the last few years, we've seen millions of new investors come into the domestic equity markets. These are Vietnamese people that have now got app-enabled trading. There's 4 or 5 million of them that have emerged over the last couple of years. And we've seen that really drive high levels and high increases in liquidity. However, in the last 6 months or so, there's been a few domestic issues which have scared off the domestic investors. And so that's seen a rapid fall in the equity market. Last year, the market was down 40%. Our fund was down about 30%. And so we've seen valuations fall down to very attractive levels, particularly given the growth prospects if you take a 3 to 5 year view. So if you compare Vietnam to peers in Asia, both on a price earnings basis and also on a price to book basis, it's cheap. Markets trading around about 10 times PE, price to book 1.3, 1.4. These are historically low levels, despite the fact that Vietnam has a high level of return on capital and what is one of strong profit grower in the region compared to ASEAN and compared to the broader indices. But it's a frontier market, so it's domestically driven, not a lot of foreign investors relatively. It's the largest market in the frontier index. One day, probably at least 2 years away, maybe 3 years away, it will be an emerging market proper. And we'll see greater flows of capital, perhaps greater awareness of the market by the foreign investing community. That, coupled with the strong domestic interest in sunny days, would see strong flows and strong performance and a re-rating in the market. But that's some time away. It's at least 2 years. So MSCI and the other organizations that determine whether a country is going to be rated as emerging or frontier take many data points, and Vietnam doesn't meet all that it needs to do in order to be classified as an emerging market. And so it's at least 2 years away. And the main blockage to this is that there are still foreign ownership limit restrictions in Vietnam. And by MSCI, that's seen as not providing a totally level playing field for foreign investors. The government's aware of this. The government sees the capital markets as a great tool to diversify the funding for public spending and wants to see the country develop its market infrastructure. So although it's a kind of socialist, communist political structure, it's very much a capitalist thinking, capital market based economy. And so they're taking steps to address many of the issues that will see it in the future undoubtedly become seen as a fully fledged emerging market. Developing new instruments in the capital markets, it's implementing, updating its laws and regulations on securities, investing and trading, and importantly, improving the infrastructure of the stock market. Later this year, we'll see a new stock exchange system come into place, which has the ability not only to increase the volume the market can handle, but also to shorten the trade settlement period and allow central depository for shares. So all of these steps take time. The capital markets in Vietnam are young. They've been growing rapidly. Market cap has gone from 0 20 years ago to $300 billion. Bond market has come from 0 and has grown rapidly. But, and here's a big but, it's never a smooth linear line upwards. And so the economy can get ahead of itself and the stock market can get ahead of itself. And that's why we've seen periods of significant correction over the last 6 months. Our approach to the market is to, as I say, to do simple things well, to look at good companies in good sectors, combining both the strong top-down opportunities as well as really fundamental stock picking bottom-up, finding businesses that want to do better, measure more, report more on their activities to investors, and learn. When we first started engaging with companies, the topics of ESG were foreign. They were very new to the market. but my colleagues have been very patiently working with our portfolio companies to educate, train, and show the benefits of having better transparency, better reporting. We're a very disciplined investor. We're conviction-led, and we have a very concentrated portfolio of between 20 to 25 companies at any one time. Our portfolio is driven across several of the key sectors. The banking sector in Vietnam is posed for great growth over the long term. Half the country is unbanked. So as digitalization comes through and as wealth increases and Vietnam continues to be this trading partner to the world, the banking sector is a great way to play that growth story. The rise of the domestic consumer as that inflection point I mentioned in terms of per capita GDP consumption, but also as the urbanization leads to greater modern trade, modern retail opportunities, means that retail is a good sector as well. Now, I mentioned at the beginning the urbanization story and how Vietnam is at 37%. Globally, it follows what's known as the logistic curve with an asymptote around about 70, 80% urbanization over the longer term. Eventually, Vietnam will get to those levels and real estate will have its day, but today is not the day. The real estate market in Vietnam has been suffering over the last 6 months due to some credit squeeze through the bond market, which has had some growing pains and new regulations put in place that have scared off a number of domestic investors. And so the real estate market is a bit soft at the moment, but this is part of the growing pain of what is a long-term journey. Real estate in Vietnam has two varieties. You have retail real estate, housing and condominiums and apartments, but also industrial real estate. And that's where we see tremendous opportunity. So as foreign direct investment increases, as component suppliers from Taiwan, Korea, and other countries move to Vietnam, there's an opportunity for the industrial parks to create these clusters of manufacturing. And so we're backing a few of these companies that are really trying to carve out a strong niche in that area. We're also a big believer in digitalization, and our number one portfolio company, FPT, is a real digital champion. It provides software as a service, an outsource of software to Fortune 500 companies, but it also provides a digital backbone within Vietnam, connecting through fiber and also providing consumers with broadband and even pay TV services. Its other great leg that it has as a business is education. It trains about 100,000 people from kindergarten up to university with a big focus on science, technology, engineering, and math. So really trying to help develop the next generation of digital savvy employees for the growing workforce. So banks feature well in our portfolio, about 30% of our portfolio, playing to the key underpinning of the financial services sector. The retail and the consumer feature heavily, as well as the digitalization infrastructure through FPT. We're opportunistic in the sense of we can look at many sectors, but we're conviction-led. So we want to have a small, highly concentrated portfolio of great names that ideally will be compounding their earnings over a 3 to 5 year period of time. We've got some cash. We're a closed-end fund, so normally to have a great new company in our portfolio, we need to sell a great company. So it's a great kind of discipline for us. But we also do have some cash because through the course of the last 6 months, we've reduced our exposure to the real estate market. And so that cash is available for us to take advantage of what we see as great valuations. In some businesses, they've got tremendous growth prospects ahead. We're market size agnostic. We're nimble as a fund. We can move from small, medium to large companies. And in fact, this slide is a bit misleading because some of our businesses, when we first invested in them, they were small or mid cap. One of them, our jewelry business, was $100 million in market value. It's now close to $1 billion. So it's gone from small, medium to large cap. But this slide is to illustrate that we're able to invest across the spectrum. We're really just looking for good businesses with good management team and great compounding growth prospects. Over the long term, we've outperformed the index as well as the other opportunities. Although, again, to caution, Vietnam's not a market you want to come in and out in a year. You want to be looking at a 3 to 5 year horizon, and you want to be a believer that the growth prospects will become high, but it won't necessarily be a smooth journey at all moments in time. So if we take the longer term view, there's significant outperformance of the broader emerging market index and the frontier market index, as well as the domestic indices. So Vietnam's a market that should be in people's portfolios, should be at least on their radar screen if they're not invested now, because within Southeast Asia, Vietnam's an emerging champion, and it's got a great strategic importance for many manufacturers that are looking to move and relocate to Vietnam. So for Dynam, the fund manager, we're singularly focused on Vietnam. It's all we do, and we're focused on long-only equities. We want to find these great businesses and work with them and journey with them to see them improve and to see their valuations get enhanced and to help deliver great returns for our investors. We take our role as a responsible investor seriously. We're active in several groups and organizations trying to support good growth and responsible investing in Vietnam. So why Vietnam? Well, I say it's attractive levels of valuation. Our portfolio 8 times PE for 2023, yet with 20 to 25% earnings per share growth. The fund trades on the London Stock Exchange, so it's easy to buy. It also trades at a discount to its NAV, currently around about 12%. So there's some upside potential as well as over time discounts one would expect to eventually narrow. Vietnam itself is on a long-term journey, which is well aligned with foreign investors. The government wants to see the country modernize, become that key part of the global supply chain, and see its population become wealthier. So if we can just follow on that mode by finding good businesses, then we should be well positioned over that 3 to 5 year horizon. So the fund broker is FinCap. It's easy to approach. We're very open to questions, either today or through email or through other platforms. We provide a daily estimation of the NAV, and we're delighted to have a number of UK investors as our partners, very loyal to us over many years. And I say Vietnam is a market that no one can ignore. So that's, again, apologies for the sound quality at the start of that presentation. Blame the change in temperature from Asia to London, but I'll be delighted to hear questions and to provide any additional color or insight that I can.
Excellent. Thanks, Craig, for a reliably excellent and informative presentation there. So questions were coming through as you were speaking, so I'll start putting those to you now. As you know, with Vietnam, there's always questions about political risk. You know, you use the C word there, communism as well. I saw that back in January, there was so correct me if I'm wrong, but the president resigned as some sort of anti-corruption thing led by the Communist Party. And the understanding seems to be that, like China, the political power sits within the party itself rather than the formal seats of government. So firstly, is that correct? And secondly, do you think that's changed how people see political risk in Vietnam?
So the Politburo is very important. So it's the group that decides on most of the directions, and so it's driven by many voices at that level. It's not it's not a democratically elected kind of form of government, but provides longer term stability through, I say, looking at seeing the country become a modern industrialized economy and seeing the people get wealthier. That said, the government wants growth, but not at any cost. And over the last year or so, there's been a big push against corruption. And a couple of deputy prime ministers fell on their swords at the end of last year. And as you said, at the beginning of this year, the president, which is largely an honorific role, it's not so much an executive role, resigned. He said, look, this all happened on my watch. And this was corruption to do with COVID and the supply of PPE and test kits and things like that. So similar things happen across the world in terms of COVID time, Vietnam no exception. And so the party and the government are wanting to take action. They're also wanting to make sure that the capital markets grow also, but not at any cost. So last year, the government took a very heavy, perhaps heavy-handed view, but maybe a necessary view to root out some bad actors in the bond market and the stock market. Those things combined have, I think, shaken domestic confidence amongst those domestic investors. And that's why the stock market's been sold off so rapidly. So long-term trajectory is never going to be always smooth. But it's a country that does have a broad level of political, both stability, but also long-term mindedness. So you don't have a political system that's trying to get re-elected every 5 years and just try and do popular things and make popular statements in the press. You have a more deep-seated desire to see the country be prosperous, see the people prosperous, and to see sustainable growth. So it's very different to many countries in the West. But it's a system that works in North Asia and East Asia. And certainly over the last 30 years, it's contributed to a dramatic increase in the growth of the economy in Vietnam.
And another ever-present question really is about this potential upgrade to becoming an emerging market. Again, there were reports, I think, around the same time that internally some of the work was being missed on that, some of the deadlines, and I know that somewhere, there were apparently reports from internal sources that the deadline might be pushed back by about 5 years, so from 2025 to 2030. I mean, again, is that something that worries you? Where do you see the country in that process at the moment?
Well, look, it's very interesting. So the way it works is that the institutional investors are asked, or they're polled by MSCI and others about their views on a country and whether it is a level playing field and whether they're having a successful time accessing the capital market, getting the money in, getting the money out, buying, selling stocks, those kind of things. And there are about 18 criteria that countries are measured on by MSCI. And Vietnam's good on many of those criteria, but on the foreign ownership limits and the percentage of the free float that has foreign restrictions, it doesn't pass currently MSCI's requirements. So it's trying to address that. It's trying to liberalize access to the market through ETFs and through other means. And in some instances, accommodating higher foreign ownership in certain sectors and certain companies. But I think MSCI only really review it once a year in June of each year. So if you miss June of 1 year, you've got to wait at least 12 months to get even onto the reserve list. And so Vietnam's not on the reserve list yet. Last year, it was hoped that would happen this year in 23, but that's unlikely. So the earliest would be kind of watch list in 24. There's then 12 months before they say, okay, yes, you will be coming on in another 12 months time. So the earliest that this will be happening is kind of watch list 24 and maybe entry 2026. So it does take time, but actually we think that it's probably the run up to that that's the most exciting time, because the market infrastructure is improving and steps are taken to clarify the investment laws and make the investing environment better. And so those will persist and those will benefit investors now. And then of course, over time, as it does get accepted perhaps into the emerging market, you'll see greater flow and greater interest. And that's where we'll see probably the re-rating in the run up to that. So it's something to keep an eye on. And it's a kind of an opportunity over the next couple of years that could see great benefits for those perhaps intrepid investors that come in now.
And I'm just wondering as well, when you look at this from the perspective of, those that hold political power in Vietnam, I was reading about the Adani scandal, in India and what's going on there. And I just wonder if, I know both India and Vietnam, I suspect, have very strict controls around things like short selling, but I just wonder if something like what's happened to the Adani Group might make the prospect of liberalizing foreign ownership of companies, etc., a little less attractive to these kind of to places like Vietnam than it might have been?
Look, I don't think so. It's sector by sector. So, in renewable energy, you can be 100% foreign owned. In many sectors, you could be 100% foreign owned in Vietnam. There's no issue. But in certain sensitive areas, there's a foreign cap of 49%, or for banks, maybe 30%. And if you're involved in things like retail, then there's a limit of 49%, which is not uncommon in many parts of the world. The issue really for Vietnam is that too much of the index or the free float does fall under this foreign ownership. So over time, as the companies get bigger and some of those levels are lifted, then Vietnam will score more highly. And I think the government is open. It sees the capital markets as a means to diversify its funding sources for public infrastructure and for other such things. So I don't think there's any resistance. And they're certainly not scared by the growth in the capital market. But bear in mind, it's only been 20 odd years that the stock market's been in place. So it's not unexpected that there are delays at times and there are growth pains along that journey. But it's come a long way, and it's got a tremendous runway ahead of it. Even if you just compare it to, say, where Thailand was 20 years ago, or China, or Taiwan, or South Korea. So there's a well-trodden path of how involvement in the capital markets grows and develops, and there are models that perhaps Vietnam can choose to follow over the next number of years.
And lastly, there's a question here about and you've made the comparison to China, and the two are reasonably closely linked. Is there a worry around this kind of speculation of the property market that we've seen in China? Because I think that's something that's going to be in a lot of investors' minds as well. Is there a parallel to that in Vietnam?
Not really. There's not the same kind of level that we saw in China, where there are empty condominiums just being built willy-nilly. So in Vietnam, there's a massive runway still, or scope for development. If you believe in that urbanization rate's going to go up from 37% to even 50% in a decade, then you're going to have to build millions of new homes. And so the developers, when they get their act together and get their financing sources streamlined, there's tremendous potential. They've got land banks that are cheap. The opportunities there. At the moment, the cash flow isn't, because there have been some regulatory changes in the bond market. And so some of these developers are not able to access the capital they need to develop out these projects. Also, bear in mind, interest rates have popped up, because of global increases in interest rates. So, it's a soft period for the real estate market. Mortgage rates are actually quite high at the moment in Vietnam. So I think longer term, it's a great sector, and some of these companies are well positioned. But I think it's going to be a nervous time in the real estate market, at least for the rest of this year.
Great. Thank you very much. Thanks, and particularly thanks for taking those questions so head on, Craig, and giving us an insight into what's really going on in this exciting market.
My pleasure.